Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 25th of August. So I've seen some really big movements in the indices and the currencies in the last few days, especially this week. And yeah, look, some key levels were hit and reversed. So we'll jump straight into the charts, see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and you can see that it had a really big rebound. It hit the low of very close to the 63.50 area. Just touched it and then came bouncing straight back up to the support zone that was there previously. Now, it's a very common occurrence in a lot of currencies and also the indices. It's very technical when it does that. And as you can see, look, it had a very big move up, and it looked like a lot of the things were reversing. This is not the only one. The indices were the same, and it had a very big move up. But look, the last candle, the last daily candle, completely reversed all that. It was so aggressive that it barely reached the 20 moving average, which is actually quite rare. Normally, it would pull back up to the 20 moving average, and that is a fairly bearish sign, actually. So we're going to be really mindful that it did actually fail to get to that point, but the fact that it did actually sell off before it even reached that resistance level, and it was only just off it, was only like a couple of pips off it, you basically are looking at the first target being the previous low. So we're already at the 64-cent mark. And if this low happens to break, that 62 level is looking very likely. We really need a daily close below this level. And if we get that, we can start targeting shorts down to that 62, which is next real support for it. You can make an argument for this level here as well, where you could probably get a pop a line there. And here we go. That is the first level of intermediate support, because you've got support and resistance at the same point. You can see that we've got these candles here pushing through. Okay, so you can get a little bit of support there, but that would be your initial target. So you're talking about that sort of 63-cent mark. No real surprise there, though, because we know that this moves in nice even bounds of 100. But look, this was a very strong sell-off, and you needed to go to a pretty small time frame to actually get hold of it. You needed to look probably at a 15-minute chart, because it happened fairly quickly. But as you can see, and this is what I like about the technical analysis that we talk about all the time, even though it didn't reach the exact level that we probably would have sold off on, which is the 65-cent mark, once it did turn around, it gave us all the signs that we were looking for. We got the series of lower highs and lower lows, the pullbacks to the 20 moving average, and as you can see, basically you could have got in about 4 or 5 times in what looks like a very ugly candle, but you still had the opportunity to actually get in. So yeah, pretty good trading on the Aussie, and hopefully you're able to catch some of that move down, but also some of that move, that impulse move up to test that resistance as well. So yeah, good trading on the Aussie. The US dollar CAD has gone from strength to strength, of course, to the 15-minute chart. I'm going to leave it on the 15-minute chart, though, to highlight how important it is that when you are actually trading it, you can see the moves up, right? Look, you can see here from when it did eventually start to turn around after this little bit of weakness through here on Thursday. You can see that all it's done is basically pull back to the 20 moving average, and look how many times it's done it. It's given you about 6 or 7 opportunities to get in on this move. It's a pretty decent sort of move to 135.20 to that 130, well, nearly 136 really. So it's an 80 pip move, but it gave you about 6 or 7 opportunities to get in on the things that we talk about every single week: the 20 moving average pullback on a smaller time frame, and of course the 20 and the 50 moving average cross. So that always is a good sign that yeah, it's a healthy trend. And even though when you go to a daily, it's going to look like it's just moved, and how do you even get in on that? Whoops, let me just auto correct that. Okay, you can see that we've got a big 2 candles, and it's only, and after a volatile candle too, by the way, you can see that we've had, that candle looked like I wanted to sell off, but when it did reverse, you can see it's very close now to the initial resistance that we would expect. All this resistance band here from these previous peaks, you would expect to be a reasonable level of resistance there again. But you could see how easy on a 15-minute candle, even though on a daily it looked hard to trade, on a 15-minute candle it was very easy and gave many opportunities to actually get in. The US dollar yen, another one is, look, it came back, pulled back to the resistance zone of around that 144.80 area. Perfect trading. This is what we always look for when you see a series of higher highs and higher lows. All it needs to do is break through that resistance. We never really want to take the first move because yeah, that's often the one that's going to reverse. It came back down, touched the level of resistance, which is now support, which is what we expect. That's a roll reversal zone. And once that happened, you had a pretty reasonable move up again as well, right? So to actually trade this, again, it's one of those ones where you know the zone, we've had this line here for a little while. Once it comes back and tests that from above, you can go to the smaller time frame, depending on what you're trading in terms of the area you're in, whether you're trading the Asian market or the US market. But again, once it did pull back to this level, as you can see, double bottom, came back, tested the double bottom neckline from there, and then off it went, and then touched a 20 moving average there. It even gave you a morning star on the 20 moving average on a 15-minute chart. If you needed any more confirmation after the double bottom, even the retest, it gave you a morning star off a 20 moving average, which is actually quite amazing. And then off it went, fulfilled that pattern, came back and tested it again, came back and tested it again and again. Okay, so this is it happens all the time. This is why I talk about 20 moving averages being so important, because they give you all the information you need to actually get in and out of the trades. The dailies are great to analyze and set the levels, but when you're actually scalping, it's the 15-minute and 1 hour that you're looking for, and these methods work time and time again. So hopefully you were able to get hold of some of that as well. We'll move over to the dollar index. This is trying to break through to a new high here. You can see it's been nothing but strong. Last week we were talking about it being very consolidated, but it was going to do something, and it's something it did straight up, and now it's testing the absolute highs here at around that 104.25 area. Once it breaks through there, it's got a decent move and run up to about that 135 area, which of course spells a bit more doom for the euro in terms of shorting. We're going to go to the euro now, obviously, because that's the one we want to be trading. But yeah, really strong move here. Once it broke out of that zone, it was off and running. The euro is the one, and it came back. Look, you look at it on a daily chart, and there's nothing strong about it. This level was very important, definitely, and it hung there for the best part of a week, as we know. We talked about it last week. But once that did break, yeah, look, it's got the 106.80 to 107 well and truly in its sights now. It's definitely got the 20 and the 50 moving average across, which we knew was going to happen, unless the market turned around at a very high, extraordinarily strong rate, which it didn't, and basically just continued to sell off. So look, nothing short of a close above the 20 and 50 moving average. Nothing changes from last week in that sense. If it doesn't close above the 20 and the 50 moving average, we are not interested in taking any long opportunities on that one, because I want to see momentum reverse completely. This is in a dead set downtrend on the daily, and yeah, until this gets above the 20 to 50 moving average with a series of higher highs and higher lows on nothing short of a 4 hour, I wouldn't be interested in looking at any longs on this one. But any pullbacks to a 20 moving average on a smaller time frame will give you an opportunity to continue on with the trend, with the ultimate target probably for this particular short being around that sort of 107 level. But yeah, pretty good trading on the euro, and hopefully you're able to catch some of that. But again, the long is very scary, so it needs to do a fair bit of work before we look at that. And the US 500 is the last one. This has been terrific. Again, this also gave us a morning star pattern off a level of resistance. And the beautiful thing about this one was it came back and tagged the roll reversal zone, which we expected it would do. But when it did, it actually gave a morning star pattern on a daily chart, and that is a big deal. And that basically played out in the next candle all the way to the next resistance zone. And hit the 20 moving average, and then a complete sell-off again, reverse all that. You would have been on extraordinarily high alert at the 20 moving average and that roll reversal zone. That's the important thing about knowing the levels, knowing that we are looking for a very important turnaround at these key areas, and you're looking for any sign of weakness. And once it did that, it gave us the up move and it gave us a down move in the same week, which is, rare that you get so much movement on a daily chart. That plays out technical patterns perfectly, especially when there's significant patterns and significant levels. So hopefully for anybody who was on the lookout, you would have been able to catch that, because you had an opportunity to get up to that level of 44.50, and hopefully you're able to sell it off again as well when it hit there, because it started to show the weakness, and when it did that, off went. Same deal in terms of support now, though. Look, the previous support is where you'd expect it to find a little bit more. But if it breaks that, which it's a pretty good chance it's going to, look, when you see a reversal like that to a pullback to a 20 moving average and a big sell-off like that, you're really anticipating a move and a big lightning bolt down. So, but it needs to get and close below 4,300 to actually affect that. And if it does that, if we get a daily close before 4,300, then we start to look at targeting down to the 41.80 as the next very strong support zone. If it gets to the 43.50 and starts to look like it's bottoming here and turning around on a smaller time frame, nothing wrong with longing it back up to that resistance point if you're scalping it and you're trading it throughout the US session. So yeah, definitely opportunity to do that, but it has been very, very technical, and hopefully you're able to get some of that. Hope everyone's had a great week's trading. I think we've seen a lot of the good opportunities that we talked about last week play out. Hopefully you're able to get some of those. Have a great weekend, and I look forward to seeing you all next week.